Hi and welcome to the Market Alert for Monday the 17th of October 2022. So stocks and bonds hit as inflation expectations rise. This is from Friday, of course. And also you may have missed this one, but never mind the pound collapse. In Q dollar squeeze, Fed sends a record 6.3 billion to Switzerland to save the swap line. Markets stop panicking when central banks start panicking. Yeah, so there's a lot going on behind the scenes in the banking sector as well, which is not being reported. So, interesting times. And we spoke about this on Thursday, about the ECB terminal rate of 2.25% is a dream. And because it won't be real. So somebody else writing an article saying exactly what I was saying on Friday. It's just cloud cuckoo, but then no surprise. Volatility this week could come as a result of this. Everybody's trying to get rid of Truss now. They've got rid of the Chancellor. All of this morning's headlines, you'll see again, Truss fights for survival. Plot to topple Truss this week, which we got the game is up. Tory MPs, there's 3 come out overnight wanting to get rid of her. Started off with one yesterday evening, now it's just gaining momentum. Before long we'll end up with Boris back by the looks of things. It just, honestly, you can't make it up anymore, so anything could happen. Economic news this week, well, the only one to look out for really is Wednesday's CPI for the UK and RPI. It's forecast to be higher by just 0.1%. 10 there, and the RPI is missing off here. Let me just, I don't know why they won't show the RPI, probably because it's a higher number and send further panic, but let's just go and pick it up here. RPI is running at 12% at the moment, and as you can see there, it's to increase again 0.1%. And that's the big one for the week for the UK. There's Fed members out this week and all the central bankers, but quite a quiet week actually, so it's going to be all sorts of other geopolitical news driving prices. Gold silver ratio at a barrier at 90. You can see there on Friday, been absolutely hammered. So let's have a look at the market, see what the Dow did on Friday, and all of the stock markets all bouncing on the overnight though, because of Hunt being being put in after replacing Khawazi on Friday of last week. So in the Dow, you can see that Friday we were down, some selling, but we're up on the overnight and expect this to continue. I don't see why not at the moment. They'll try and bounce the markets back to the upside and discount what's going on if they can. We're heading into that sort of Santa rally point as well after we get through the month of October, and we're more or less halfway through now. So they're going to do whatever they can to move the markets to the upside, which is what we're seeing there on the overnight market, up 200 points already, stuck at the 50 bar moving average though in the daily chart. Like I say, it just depends on the geopolitics really of what's happening, but the daily chart also trying to put in that reversal at the moment to the upside. Meanwhile, in the German DAX, same thing there. We've got some supply coming in on Friday, but up on the overnight. I think we've actually gapped higher, haven't we? No, we gapped lower and filled the gap is what we've done. It's the pound that's gapped higher. Again, heading towards the DP, up strongly at the moment, up a good 50 points on the overnight there. Trades for last week and the total from the 19th of January are... So for the week, profit of 1,264, 34 profit factor, and we've got 87.13 on the win-loss ratio there. So a good week. Monday I had 78 in profits, and by the end of the week, thanks to the volatility, and that's despite missing Thursday's CPI, it wasn't CPI numbers. Yeah, it was CPI numbers. Missing those numbers as I was away from the desk. Where the market traded on the Dow a 1,500 point range, but not to worry. Like I say, made up for it on Friday, adding a lot more profits. So we'll see what this week brings. It should be quite a steady week, I would have thought. Meanwhile, in the 5-minute charts, you can see overnight that we've got the gap being filled and the market trading to the upside there. A bit of interest there at the moment. You can see a lot of volume moving into the market there as prices have headed to the 200 MA in the 5-minute chart, and a bit of supply coming in there. In the S&P, we can see that price is also reversing on Friday, but we've got demand coming into the market there. Prices moving back to the upside on the overnight, coming off the low, holding above this. Need to take out the 200 MA, the 50 EMA, and the DP in the 30-minute S&P there. Meanwhile, at home, at the FTSE, down on Friday, but again showing demand reversing on the overnight. Might be a bit of turbulence in this one if Truss is forced to quit. We'll see how that unfolds this week. 30-minute chart's been fairly quiet in response to this so far. I'll see what the market's reaction is at 8 AM when the futures officially open in the cash market too. In the currencies, JPY, GBP moving to the recent high, which you can see is a lot of physical resistance there, price resistance, a bit of supply during Friday, but managing to move higher overnight, which you can see there. And that's because the pound has moved higher as well, which we'll have a look at now. As you can see there after Friday, and when we had the market lower as the Chancellor was sacked, he was replaced by Hunt, and the markets found a lot of support in this, which you'd expect. So the pound up, breaking to the upside there above the DP at the moment in the 30-minute chart. And finally, in the metals, silver monkey hammered on Friday, as you can see there, down to the 89%, having come down from $21 all the way down to $18.50. 30-minute chart, you can see there, they couldn't resist smashing the price down, despite the fact of a lackluster rise in the US dollar. Silver absolutely hammered. It's unbelievable, isn't it? With the price of everything at the moment going through the roof, this is still 60 to 70% cheaper than it was in 1979 and 2011. Until there is a pivot, the metals will continue to be under pressure, with the odd occasion where the market actually splits from the relationship between the dollar and the metals. Down to 78% retracement in gold. 30-minute chart, you can see they're coming off the low and moving back to the DP, but starting to come under pressure. In the US dollar, up on Friday, but didn't take out Thursday's high from the CPI number. So again, you see how the metals are absolutely crushed just on a small move to the upside in the US dollar, which you'll see there just moving up slightly. Overnight, the market holding at the DP level as well for the dollar. So despite the fact that the pound is higher, it makes you wonder whether it will hold, because obviously there is talk of a 0.75% rise in the Fed interest rates come November. I think that's going to happen after the midterms. They seem to be staggering this a bit now, so I think mid-November before we get a decision on that. Also, Bailey's been out saying expect higher interest rates as well. Well, are we surprised? I think we're probably more surprised by how long it's taken them to actually start to do this with any conviction to try and stop inflation. But of course, we've got those numbers on Wednesday, and I look forward to seeing those at 7 AM. Okay, there's a quick roundup of Friday's action, and like I say, I'm not expecting a great deal unless Truss decides to resign, which I very much doubt. So and the war with Ukraine and Russia has vanished off the front pages once more. Whatever is convenient at the time to move the markets, I suppose. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.